Are you setting up an IRS installment agreement? You'll likely need to fill out Form 433D, and making mistakes could delay or even cancel your payment plan. Let's go step by step. By the end of this video, you'll know exactly how to complete Form 433D, avoid common errors, and ensure your installment agreement is approved without delays. I've helped countless clients successfully set up installment agreements, and I'll walk you through each section of the form so you get it right the first time. I'm Brad Paladini, a tax attorney with 12 years of experience helping people navigate IRS payment plans and tax resolution strategies. And there's one mistake many taxpayers make when filling out this form, and it leads to a rejected agreement. Stick around and I'll show you exactly what it is. Before we start filling out the form, let's talk about what it actually does. Form 433D is used to set up a direct debit installment agreement. It doesn't have to be direct debit, but most commonly it is a direct debit installment agreement. That allows you to pay off your tax debt in monthly payments automatically. First, you need to get a copy of the form. If you just type in 433D into good old Google, it'll come right up. It's also available on irs.gov. Once you have the form, let's start with the basics. The top part of the form is just your personal information. So you're going to enter your name, your social security number, or your employer identification number. If you're married and it's a joint debt, you're also going to want to include your spouse's social security number. Please double check to make sure your address and contact information are correct in order to avoid IRS delays. The next section is going to determine how much money you'll pay each month. Most commonly, when we're using a Form 433D, we already negotiated with the IRS on a monthly payment amount, and this is just finalizing that agreement. So in this section, you're going to enter the total amount of tax debt owed. You're also going to specify the monthly payment amount. Now, it doesn't need to be the same amount every month. Sometimes we set clients up on what's called a step installment agreement, where the first year maybe they pay $100, and then after that year it will increase to $200 because they expect to make more money in the future, or maybe they'll have less expenses. So it doesn't necessarily need to be the exact same amount every month. You can step it up over time. You're also going to need to list the due date that you prefer. This is the day of the month that the payment will be withdrawn. You can enter any date between the 1st and the 28th of every month. We usually suggest to make it when you get paid, right? So that way you know you have enough money in your bank account to cover the monthly payment. The next section is for your bank account information. This section is where many people make mistakes. All you need to do is enter your bank routing number and account number, which can be found on a check. The IRS does require a checking account. Credit cards are not accepted. Make sure if you are handwriting this, your handwriting is legible. We've had many people over the years try to handwrite it, and the IRS employee misreads a number, which causes delays. Please make sure that your bank account has sufficient funds each month. If you miss a payment, the IRS will try and terminate this installment agreement, and you'll have to redo it all over again. So make sure you have enough money in there to cover the monthly payment. Now, there are terms and conditions to an installment agreement. If you miss a payment, the IRS may terminate the agreement and start collection actions. Interest and penalties do continue to accrue while you're on a payment plan. The failure to pay penalty is reduced slightly while you're on a payment plan, but many people think that interest and penalties just stop because you're on a payment plan, and unfortunately, that's just not the case. If you file future tax returns late, the IRS can also terminate your installment agreement. In addition, if you accrue a new liability in the future, the IRS can also, and most likely will, terminate your installment agreement. You need to sign this form, and you need to date the form. Without signing and dating it, the IRS will simply not process it. Here are the biggest mistakes that can get your payment plan rejected. Using the wrong bank account information. So again, double check routing and account numbers are correct, not signing it, not dating it. In addition, the other issue we see commonly is that in the future, clients will owe when they file their tax return for this year or next year, which will terminate the installment agreement, or they file the return late, which will also terminate the installment agreement. So what happens once you send the form to the IRS? They will typically take somewhere between 30 and 90 days to process it. You'll receive a confirmation letter stating when the payment plans begin. Once approved, the letter will also detail when the first amount will be automatically deducted from your bank account. Our suggestion is that prior to the auto debit getting input in the IRS system, you just go to irs.gov and you start making payments manually. We also suggest you put a note on your calendar for a day or two after the payment is supposed to be withdrawn and just confirm that it actually was withdrawn and that there weren't any issues. Last but certainly not least, I gotta talk about the number one mistake that we see when completing this form. We talked about the terms and conditions of the installment agreement. In the middle of the page on the form 433D, there is a box in which you agree to those terms and conditions. You have to initial the box. If I had $1 for every time we sent a 433D to a client and they sent it back to us without that box initialed, I would be a very rich man. Even when we highlight it, even when we point it out in the email, many taxpayers still forget to initial this box. And if it's not initialed, the IRS will not process the installment agreement. Make sure you initial the box in addition to signing and dating at the bottom. If this step-by-step guide helped, please hit that like button and subscribe for more IRS tips and tutorials. If you need help setting up an IRS payment plan or negotiating a better deal, click the link below for a consultation. My team and I help taxpayers resolve IRS debt the right way.